Hello everyone, this is Ryan Mallory for SharePlanner.com. Today is December 21st, 2011. Market wrap up and some trade analysis as well. First off, last couple of days have been pretty interesting in the market. You had a steady amount of selling that had been happening in the market over the last 2 weeks that carried over into Monday, and then yesterday we have this 30 plus point rally, I think 35 point rally in the S&P, and today we sell off in the morning with a nice steady downward trend line, and that trend line breaks. That's why I'm a pretty big proponent of trend lines and why I trade off of them, especially when they break. But that trend line broke, and then we had an equally impressive trend line moving back upwards. So you had two really good trend lines today, and they were in different directions. So good opportunity for traders to make money on both sides of the trade, both shorting in the morning and going long in the afternoon. I actually came pretty close to going long on that trend line break, but my mind was a little bit distracted today after the TZA trade and escaping with only a small loss on it, considering what happened yesterday. I was ready to take a little bit of a breather from trading afterwards, and I felt like that sometimes when you're in a pretty volatile trade and it doesn't really go the way you want, and once you do get out of it, whether for better or for worse, you sort of have a little bit of like an adrenaline rush from it, and you almost feel that need to get back into something else. Maybe not to the same degree of risk, but just to play the market again. And I sort of felt that tendency, and I just didn't want to succumb to that temptation. But if I had done it, it would have been a good trade. But oh well. So SPY. You see here we're well off of being oversold like we were just on Monday, and we are, and this is a very quick overbought oversold indicator using a 5% K3. We're already moving back up to 80, which starts getting you into overbought territory. The SPY, and just for a reminder for those who aren't familiar with it, I'm pretty sure most people are, but SPY is the ETF for the S&P. It mirrors what it does. And today we actually managed, despite going below the 20, the 10, and the 50-day moving average, we managed intraday to climb right back up after them, after closing the previous day above them as well. So that pretty bullish day for us to see us, despite the bad existing home sales numbers and some other stuff coming out of Europe and all that. We finished higher on the day, and anytime you can do that, that's a very good sign, showing that the bulls are trying to rally, or that the market's trying to rally on good news and ignore the bad. And it clearly ignored the bad news today. So here we have like a shooting star pattern type. I think that's what we call it here, a shooting star doji, or you could call it a hammer, but typically the hammers happen on the bottom. And you think that's great because we're trading close to the day's highs, and we should move higher. But sometimes this isn't always the best of candles, and I'm not trying to say that indicates we're moving lower tomorrow. I think it's really a coin flip with it being so close to Christmas and so many people leaving the markets for the year that it can really go any direction this week. And you look back on, let's see, November 25th, which coincidentally was, I believe, like right before Thanksgiving, or right after Thanksgiving, I should say. You have, and that was a low volume day too. You can see by how low the volume was on that day. It was only a half day of trading. Bounced off of this trend line, but notice the pattern. It's like the exact opposite to the down. It's basically the same pattern, except it's the pattern that you get on a downtrend. And you see here, we're sort of like on a 3-day up or 2-day uptrend. This was much more substantial downtrend, but you can see here we had that same kind of pattern, and look what happened in the next few days thereafter. Huge gap up, followed by a little consolidation, followed by another huge gap up, and so forth. So if you were playing along these lines, and you can see it happens again right here, another morning star pattern. And I'm trying to find another example. Here's another one right there from back on 8/19. So they happen, and when they happen they tend to go straight up. Now I'm trying to look for, well, now we had a similar pattern to today, but we went higher thereafter. In fact, we shot way up. Looking for others that might be similar. We haven't had as many to the upside, so we have one right here actually. See there, it's a little bit smaller of a one, but 722 highs, pretty close to the market highs before we got that huge swoosh lower. So so this could definitely be construed as a bearish price signal right here, and maybe in the days ahead we go whoop, a lot lower. It's a tough call, but I just wouldn't. While the rally intraday today off of the lows was inspiring for the bulls, I wouldn't say, oh, we're out of the woods, because a lot of times in the past this is usually a bad signal for the bulls. It's sort of like a wolf in sheep's clothing. It looks good, but then the next day you're going to realize, man, that wasn't, you know, a sheep, that was a wolf in sheep's clothing. So hopefully that's not what it is for the bull's sake, that it keeps going up. I'm still bearish on this market, and I will continue to be bearish on this market until we break above this downward trend line here off of the, actually it goes a little further back than that. It goes all the way back to July 7th. See here, very steady downward trend line that we're stuck in, and I expect us to continue to be stuck in it until we break through this pattern here. So that's my take on the S&P. The NASDAQ, especially after today's beatdown that it took, it was down significantly despite the market rallying, mainly because of the fine job Oracle did putting pessimism on the entire tech industry. This stock is just, or this index just does not look good. Where I would wait to see where the floor comes out from underneath it. You got that trend line right there. So if it drops below here, you can see it's pretty good here on the 30-minute chart and as well on the 5-minute chart. But if it drops below support here around 54.27, 25 or so, that's gonna spell bad news for tech. So keep an eye out on that one as well. Much more bearish in its nature than the rest of the market, and you also have a triangle that it's trading in, worth pointing out as well. So there you have it. And the Dow. I don't like the Dow because it's price weighted and not market cap weighted, but probably one of the best looking indices out there. And remember, this only reflects 30 stocks. So and no, I do not know what those 30 stocks are. If I had a list of them, I could probably pick them off out of a list, tell you which ones are in the Dow 30, but can't name them off the top of my head. But breakout setup, man, in the Dow. If it breaks above, shoot, 122.51, you got a good breakout play. I don't, know if it'll necessarily challenge that before the year's out. I mean, it's got about 200 points to go before it does, but if it did break it out, you can make a case that, shoot, maybe it's gonna challenge some of these highs back here from May, July time period. But once again, highly doubt that happens this year. Extremely doubtful. And once again, you have that downward trend line that's going to be a little bit problematic. After it breaks this breakout level, it'll be testing it somewhere around there. And the VIX just continues to drop down despite, some of the weakness we saw last week and everything else. It just continues to ignore the bearishness that we saw late last week and or all of last week and then the beginning of this week. It just continues to drop, and market finished flat on the day, and this sucker's down another 7% and trying to go sub 20, which would be pretty impressive. If you look back, I mean, this thing, the VIX hasn't been this low since literally late July, on July 27th. So that was before the huge sell-off took place and everything else. This this volatility index is right where the market started selling off again. So Adam, if you ask Adam in our chat room, he'll tell you that's a very bullish gesture by the markets, indicating that it wants to go higher. And he may be right on that. I'm not sure if it's just complete disconnect, who knows, but I definitely value his opinion, so something worth listening to. And the TZA trade. Okay, so this was not a fun trade for me. I'm glad I'm out of it. Thank the Lord that I got out 4 cents from the top of the day, because it got very nasty at day's end. But best way to look at this is simply drawing it up on the 30-minute chart here. So you can see here I played TZA like a charm, you know, over the weekend. Does good. I get out, got in again, day traded it some on Monday. Great. I got in again at the close though, expecting that we would go even lower, and despite my belief that would occur, boom, the market just shoots through the roof. TZA goes straight down, and you know, I was just, you know, taking a beating on this one all day. If you look at it from the hourly chart, come on now, give me the hourly chart, or not. There we go. The hourly chart, I mean, you can see this sucker was just straight down the entire day. And I was averaging in. So, you know, I averaged in right here at about 28.25, and I added a couple more positions here as the day went down. So I was underwater on it, but, you know, it was such a strong move on low volume. I thought that I had a decent chance at making it back today, and I did. You know, I held overnight, didn't add anything else to it today, but managed to get out at 28.20, which is only like 5 cents from the day's highs. So I think I got 28.21. Exit price, or the high of the day, was at 28.25, and I don't consider that skill or greatness or some kind of special insight I had today. I just saw that there was a huge green candle bar at the time, and I said to myself, that's a good time to just go ahead and cash out on this thing, because excuse me, I didn't have a very good feeling about how long they could keep something like that going. So you can see on the screen, strong green volume bar on the 30-minute chart, that is where I got out at. GLD, and this will be the last chart that I do. Very strong trend line. You know, I bought, you know, last week off of this, you know, long-term trend line going back to 2008. I thought it had a good chance of bouncing off of that, so I got in about, you know, the high 152s, and it sort of settled there for a couple days, and then, you know, we gapped higher on Monday, or on Friday, and held that Monday, and then yesterday and today it you know, moved again higher as well. So I've got about $4 a share on that trade. It's not bad at all. I'm pretty happy with it, so I'm going to continue to hold it. Looking at it from a daily standpoint, you'll see that I have this long-term trend line exactly mapped out, because that's what I'm using for my stop. I'd like to see how high I can ride this thing up. So around like 152.58, I'm probably going to close out my position, which I'd be taking a loss at that point, because I got it at the high, I think 152.90. But you know, I'm trying to, you know, see if I can ride this for like maybe like a month or two. It would be great if I could. But ideally, it needs to break some trend lines of itself. It needs to break through some resistance. So you have this guy right here that, you know, if it fails to break through this like 167 level, I'll cash out the position. So, all right, folks, that's it. You know, if you're not able to make it into the chat room on Thursday and Friday, I understand. Christmas is quickly approaching, and I can see why that you would want to put family ahead of Share Planner. So if I don't see you, you know, God bless you guys all. Have a Merry Christmas, and I hope it's wonderful and prosperous new year that you guys have ahead of you. If not, if you're able to make it into the chat room tomorrow, I'll be there, and I'll be there on Friday, and look forward to working with you guys. And before I let you guys go, working on a new chat room. It's going to be awesome. You know, doing the plans for it, working with the developers, bringing in some other folks to help out with it. If I can get it the way I want it, man, it's going to be pretty sweet. So keep an eye out for that. It's going to outdate the one that we're currently in very quick.